Shay, are you
Hi.
doing this? Hi, am I sharing the screen with my slides or?
I don't see anything
Yeah.
yet.
Oh, not yet.
I know, I didn't do it. What is the procedure?
Just like Zoom, you click the share at the bottom.
Mhm.
Okay, so I will be sharing my screen. Okay,
I can do it if you would like. I just have to download it. Yep, I can see it.
okay, cool. When I do this, I can't see anything else.
Okay.
I can't see the Q&A or participants or you guys or anything. So
I'll keep an eye on that.
it'll be hard for me to get the cues. The
I stuck it on a separate screen.
What's that thing
Okay,
in the middle of John's face?
okay, I'll put it on a separate screen. Actually, then my head will be tilted for the entire thing, so I'm not going to do that. All right,
It'd be
so
fine.
it's 11:01. Okay, well, I guess we can get started talking about the Kwong case. Thank you so much for being here today. I want to welcome you, and this is going to be a painless tax brief educational webinar that could put a serious amount of money in your pocket. So thank you so much for showing up. Here is what we have going on and what we would like you to know. First of all, let's talk about your panelists briefly. My name is Stephanie Anderson. I'm an enrolled agent, certified tax specialist, and have a master's in taxation. I'm a firm partner here at Privity CPA and the CEO and founder of Tax Pros. Yes, so I'm an enrolled agent, which has unlimited rights to represent taxpayers before the IRS and taxing agencies. Most of people do not know what an enrolled agent is, but it's a federal tax license given by the Department of Treasury, and it started in 1874. Enrolled agents are considered America's tax experts and tend to focus on resolution work, which is what we're talking about today. The Kwong case is resolution work. Wonderful. And John Hannum.
Hi there, I'm John Hannum. I am a CPA. I definitely second what Stephanie said about enrolled agents being super knowledgeable and one of the best tax people. So, my designation as a CPA qualifies me as well. But Stephanie is the most trustable tax person that I have ever worked with and know, and that's why we have our company together. So, my background is in corporate finance and a CFO. So I've taken several companies public, led private, public, and private equity companies, and I founded PPS Solutions to do fractional CFO and diligence work. I do a lot of M&A work. So not necessarily related to this at all. I'm super excited of learning about the Kwong case and resolution from Stephanie today.
Perfect. Quick note, the information presented in this webinar is for general, educational, and illustrative purposes only. It should not be considered specific legal, tax, financial, or accounting advice directed at you, right? Tax law is all facts and circumstances specific to one type, specific to a person or a situation. I'm sorry, I lost this slide. Okay. Anyway, but if you are looking for trustworthy help to help you with the Kwong case, we have a team of resolution experts who have specifically been working on the Kwong case. All right. John, are you going to take every other slide? No. Okay. So the Kwong case, what you should know. You're going to walk away with this with an understanding of the potential impact of this particular case, what it could mean for a potential refund for you or abatement for you, what happened during the COVID era, and practical next steps before the upcoming deadline. It is not a one-size-fits-all refund opportunity, right? Like you remember those stimulus checks, the 1,200 and the 600 that happened during COVID. Those were very straightforward, same amounts for similar facts and circumstances. This does not work that way. This is going to be very specific to each taxpayer. Okay, so what we're going to cover today are these main topics, and I'm not going to talk a lot about each one. I want to make sure that you just get the key high-level points from this webinar and you know exactly where you stand and what you may or may not do after our call today. So why does this matter? Well, Terry Kwong was issued a whole bunch of refunds, and Terry Kwong decided to take it through the tax court. And we are thankful. He won. Terry Kwong won. And what that means is now, for a long period of time, penalties should not have been issued to taxpayers. So that is what happened. You understand that how tax law works, right? When tax started, we had Code 61 back in the day. And what that said was everything is taxable, right? And what has happened since then is the creation of primary source. And that happens with tax court cases, just all kinds of things that come out of the government. And we, as tax professionals, have to study all the new recent primary source that's created, and we bring that to our clients, right? It's fluid, it's changing, it changes all the time. I remember when I was choosing to become a tax professional, I had heard, this was the pivot moment for me. I had heard that if you want to be a tax professional, you must love being a student. We are perpetual students. We are constantly studying. Okay, so the Kwong case is a recent primary source, and what it held was that the mandatory postponement era, there should not have been penalties issued. Yet, there was. Okay, so what was the legal question? The federal tax law allows certain deadlines to be postponed for federally declared disasters. And during COVID-19, the entire United States was covered by a federal disaster declaration. So the question in the Kwong case was, how long did that mandatory postponement last? So that is what's at stake here. And a recent federal court ruled in Terry Kwong's favor here. So the incident, I put this down here, this one at the bottom is easier to read. January 20th, 2020 through July 10th, 2023. That's a pretty long period of time where there should not have been penalties according to this particular case issued, right? I ran a report in my resolution program of just, you know, the cases that we have in our resolution program. We ran a report of how much penalties were issued to clients during this thing, and it was $4 million just for our particular what happened at Tax Pros. Imagine this on a national scale. We are talking about a lot of money here. So the returns that could be impacted are 2019, 2020, 21, and 2022. Here's a little chart, right? So here are the key specific dates. You don't have to memorize this, but I'm just showing you. Those are the key specific dates during this postponement period that's in question. The most directly impacted years are this, right? And being in doing tax resolution, we have people who file their returns late, right? So there could be other years if they were filed during this time. Yeah, so could there be older years? Yeah. We do have one where there's 10 years of returns because this taxpayer got up to date with back filings during the COVID era And so it matters, right, what those dates are on the transcripts. Don't assume that an older year is irrelevant. We must review the account transcripts and payment history. So what's going on here is that there's something called the RSED, refund statute expiration date. And what that says is you cannot get a refund if it's older than 3 years or the tax was paid within 2 years. So understanding how the refund statute expiration date affects all of these tax returns filed in this area is what the analysis requires. Here's something to know. It's not final. So there's going to be ongoing court cases. So this may last 2 years, it may last 3 years until we finally know how the IRS is going to treat it. But Kwong was so favorable that the whole tax industry has jumped into action, right? And because of RSED, the refund statute expiration date, we have only until July 10th to file protective claims for every single one of our clients that has said yes to this engagement. It's an abundance, right? So if you want to wait and say, oh, well, it's not final, I don't know how the IRS is going to treat it, we're still going to run through court. Too bad. If you don't file a protective claim by July 10th, you cannot make that decision later due to the RSED. Okay. Potential refund claims may involve penalties or interest that were assessed for late filing, late payments, underpayment of estimated tax. We see these types of penalties all the time. They're accrued during the postponement period. So there are so many transcripts to review. Okay, so if it wasn't paid, we have two different things here. So if it was paid, now we're talking about the RSED, right? The 3 years and the 2 years to get that money back. If it's still on your transcript, but it's not paid, then it would be abated, meaning that you're not going to get money back, but it's going to come off the balance that you owe to the government, which is fabulous, right? I mean, if you have a tax debt of $100,000, more likely than not, 25% of that represents penalties. What if you got $25,000 taken off your overall balance, right? And when you're negotiating with the IRS, there are different tiers of negotiation depending on how much you owe. If you owe 50,000 or less, it's broad, roomy, all-inclusive, warm water, easy. Once you hit over $50,000, now you got to seriously negotiate, and you must reveal a lot of financial information. Okay, so what if this brought somebody down under $50,000 and we could easily get them out of collections? This is a wonderful opportunity, and I'm so excited to bring this to some of my clients that are in sticky situations. Okay, so let's talk about how you go about filing your protective refund claim. It preserves your right to a refund or an abatement once the legal issue is, when the legal issue is unresolved. It allows the taxpayer to file before the limitation expires, which is July 10th. What, 10 days? Okay, so we have already created a Kwong packet, and we had to buy additional software to help us do all these calculations. It starts with Form 843. That's an IRS tax form, and you have to have very specific type of language on this form. Me and my team have taken no fewer than 6 classes specifically on the Kwong case, making sure that all of the language that we're using, all of the supplemental statements, all of our calculations are A++, because again, there's only one window of opportunity to do this. So here is your practical action plan. You pull your transcripts. Okay, you have multiple ways to pull your transcripts. Number one, you could go to the IRS website and right on the front page, it says sign into my account. I believe you can go back all the way to 2020 on there and you can pull your account transcripts. You need to, there's going to be some like summary information of your tax return, and then there's going to be another section where there's three-digit codes, boom, 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 boom. And there's going to be brief description, there's going to be dollar amounts. Okay. Understanding what those codes mean, understanding all of this is difficult. I don't think the average taxpayer is going to know the depth of what all of that information means. But you can take a look at it and see how many, if penalties were assessed and what those dollar amounts are. Right. So, and it's up to you. What is the threshold of the amount of penalties in which you're willing to go through this process to put in a protective claim? That's for you to decide. So you want to gather your records, your transcripts. Sure, you could look at filed returns, but more often than not, penalties are assessed after the return is filed. So your tax return may not give you the information that you need. I would start by looking at your IRS account. Now here, we have a lot of tools in our toolbox. If we can get your signature on Form 8821 or Form 2848, that form gets turned into the CAF unit at the IRS. They approve it, and then I can pull all the transcripts and analyze them with my resolution software and understand what the potential is here on this. Now we are really out of time here. We only have 10 days to do this. And to get your CAF approved, it could take 3 to 11 business days to get approved. So we're really, what we would have to ask you to do is get your own transcripts so that we would need the next 10 days to do the proper protective claim. In addition, the protective claim needs a wet signature from the client. And I think of everything we're talking about here, that is going to be the biggest obstacle, is obtaining wet signatures from all of the clients and getting a tracking number, right? Not hard, but time consuming. Now, what can you expect after filing? Possible IRS responses, right? You get something into the IRS and it's just letter after letter after letter. Those are spit out by a computer. Okay, so continuing to get mail. The tax industry is going to always be reporting on the status of the Kwong case. We will constantly be reading and watching and taking future classes, and this will be a topic of conversation, right? Now, if it's denied, if you end up, let's say that it goes through, but your particular claim was denied, that is an important thing because you could possibly appeal that. And the appeals department of the IRS is your best friend. They are usually on the side of the taxpayer. So here are some key takeaways. It's potentially significant for the taxpayer in a favorable fashion. If there are penalties assessed during January 20th, 2020 to July 10th, 2023, this is your chance to file a protective claim and either get those refunded or abated. The case is not final. The government has appealed and the IRS has not broadly adopted the result. A protective claim is not maybe, it is necessary to preserve your rights. July 10th is the deadline for any claim. So we're going to be spending the next 10 days doing calculations. So when you turn in your 843 form, you have to have a supportive statement that's about 2 pages long, and you have to do complicated math on all the penalties and interest. So you have to back out anything that was assessed before January 20th, 2020. It is an arduous calculation. Our team of accountants, I have 6 that have been trained on this, and we are all having fun with math, but it is time consuming. So you have to turn all this information in to have an accurate protective claim. How can we help you? We can help you determine if it's worth your effort. We can help you obtain and review your transcripts. We can analyze the entries on there. We can calculate what this could potentially mean, prepare Form 843 and the supporting statements and calculations, coordinate signatures and mail the documentation with the tracking number. And of course, we're going to monitor and appeal. Wonderful. Well, I think that was enough to give everybody an idea of what's available. And we do have time. I was fast. I was 20 minutes. So we do have time for some questions.
One question would be maybe how, how does somebody engage you to do that? You said what you can do, but do they set up an appointment with you or call the office? How do they engage you?
Well, we have one person that's who's available on the phone, and on that phone call, we'll get you set up in our software program, which is called IRS Solutions. That's where we manage all of our penalty abatement work, all of our resolution work, and we'll get you set up in there. That's where we pull transcripts and keep track of all of these things. And so you can call Jake. He called our phone number here and at Privity. He's at extension 213. He's available right now to help you get started. What does it cost? Well, at this point, we had an easier way to get started, but there's no time left. There's only 10 days left. So but the 8821, I was doing no cost 8821s, which would allow me to pull transcripts. It doesn't allow me to negotiate. It doesn't allow me to call the IRS, but it allows me to analyze your transcripts. But we have no time for that now. So we'd have to move directly into a 2848, which is a power of attorney form. And we charge $1,000 to file power of attorney. And the reason is because it's a form that comes with a lot of responsibility and liability. And there will be 3 of us, 2 CPAs and an enrolled agent on that power of attorney form. And what that's saying is that, hey, IRS, I'm representing this taxpayer. And it creates a buffer zone between the Internal Revenue Service and the taxpayer, literally representing you. So you can ask yourself, would you rather deal with the IRS directly or a gregarious enrolled agent here in Thousand Oaks? So $1,000 to get started. So I think people may have trouble pulling their own transcripts, which would have to happen, right? So what I can do is I can share my screen here on showing you the IRS website and where you could go. So you just go to irs.gov and says you can create an account here or you can sign in here if you already have one. This takes you to id.me. Well, if the first time you're setting it up, it's going to ask you a bunch of identity questions that are pulled from your credit report, it seems. I don't know that for sure, but it seems like they're pulled from your credit report. So to verify your education. And then you have to sign up. I mean, not your education, verify your identity. And then you have to sign up with the id.me. Unless you're already signed up, then you just connect your IRS account. And once you're in here, you could get a plethora of information of what the IRS has under your Social Security number. I mean, really, everybody should be logging in and seeing what 3-digit codes they're posting against your Social Security number. There's a master transcript code booklet out there. They put all these different codes on us. The other awesome thing about signing up with us and having us monitor your transcripts going forward, even after Kwong is long and over, we monitor those 3-digit codes. So if your return was chosen for audit, there's a specific 3-digit code that goes on your report. It doesn't spell it out for you. It doesn't say in words, hey, this return, blah, blah, blah. It's 3-digit code. Refer to the audit department. That gives us a 6 months heads up before you're even notified that you're being audited. That is one of my favorite fun things, right? I love this. So monitoring our transcripts is super, super important and valuable to every single taxpayer. So we offer that here at Privity CPA. We can do that with an 8821 without taking power of attorney, and we won't charge you for it if you are our client. That will be a value add that we can have in our engagement here.
There was a question here. If tax returns related to the affected years had to be refiled in 2025 and interest was assessed because of the refiling, would that be covered under this ruling?
Probably.
Okay.
So you want to look at those dates,
Mhm.
right? You want to, on the account transcript, everything has a date. So does the date fall within the postponement period between 2020, 2023? If it's an amendment, there's probably some, I would say pull your transcripts and give it a good look. You can send them to me through a secure portal if you want me to look at them and see if that's a yes or a no. You gotta do it quickly here. Honestly can get you set up in the portal. So this is going to mean so much money for the American people. And you better bet they're going to fight this. I mean, I was sharing with you it's $4 million just on the segment of clients that I represent. I can't imagine. So, but it makes sense, right? Under a federally declared disaster area, penalties are seized. Yet a lot of people were assessed penalties. Just like recently we had the Palisade, Malibu, and Camarillo fires. We still have EDD notices where they erroneously assessed penalties for that. I mean, we've made so many phone calls saying, hey, you erroneously assessed penalties during a disaster area. I mean, it's just a messy situation. And this is a big opportunity for us to clean it up. So if you have trouble running your transcripts and you are local here to Thousand Oaks, you can come in the office. We'll go in the digital concierge room and we'll help you pull your transcripts and take a look at them.
That's awesome. Well, a lot of great information, Stephanie. And obviously we've let everybody know how they can contact you and the team here. And if they do need to get Anashe set up in the portal so they can give us information directly, that's great. So hopefully everybody takes advantage of this. Anything, and we're right at the half-hour mark, so half-hour webinar on a important but not totally complicated topic. Sounds great.
Yeah, I just thought of something valuable to add.
Okay.
Brief, short. Given that everybody's pausing for a moment to look at their account transcripts and seeking penalty abatement, there could be other penalty abatement opportunities besides the Kwong period. So love isn't even enough word for this. I love getting penalties off. The biggest penalty I've ever had removed was a $120,000 penalty. And I had one below that at $110,000. It is such a thrill to get that letter in the mail, especially like if the clients can get back money. I don't tell them. I let them just get a check in the mail one day. And then I get a phone call, and it is such a good day. See, as your representative and your enrolled agent, I get to go on this journey with you. I get to feel the burden and the relief with you, and that brings me great satisfaction. So I would encourage you to look at not only up to the years we talked about for Kwong, but the last 3 years as well. There could be other penalties, abatements available to you. So we're available for that. Great.
So if you're ever in a difficult situation, Stephanie is definitely the person that you want on your side. Yeah, it's hearts.
Who gave me hearts?
I don't know. Somebody gave you hearts. They're flying all over the screen.
Well, I
That's
think
great.
when you talk about putting money, taxpayer money back in their pocket, that's what people love.
Well, I certainly appreciate the information today, Stephanie, and thank you very much for presenting it.
Well, thank you for the opportunity. I'm excited. I can't wait. And the next 10 days, we are going to be doing some arduous calculations and writing specific supporting statements as a team. And I'm going to enjoy working so closely with my team on this special project. And I can't wait to see how many wins we have for our clients.
In addition to the attendees that have joined us live today, we're going to place this on the portal today, so all the Privity clients can access it and see it. And I hope people watch it and give the office a call.
Absolutely fabulous. Well, I guess we should wrap up. I've got a lot of work to do.
Awesome. Thank you very much, Stephanie. Thanks everybody for attending.